All right, welcome to this week's breakout watch list from December 12th to the 16th. The market just came off of a rough week, and this upcoming week we have both the CPI numbers and a Fed meeting, so we're going to know the direction of the market very soon. But in this video, I'll be covering the top 10 swing trading setups going into this week. Each of these stocks either have strong fundamentals, strong technicals, or volume patterns that lead to uptrends. And this video is sponsored by MarketSmith, which is the trading research platform that we're going to be using to break down each of the stocks. Here are the 10 setups that we'll be covering in today's video. Each of these are from the long side, but if you're looking for some short setups, I put some in the comments below. Now let's jump over to MarketSmith and break down these stocks. The first stock is AMP. This is in Finance Investment Brokers, 9th strongest group out of 197 in the market. It's an A+ group strength rating. Overall, this has a B+ accumulation distribution, 96 composite, 93 relative strength rating. It does have increasing sales, but earnings are down a little bit year over year. But really what we're looking at is the price and volume action, and this stock is very strong. It has made new 52-week highs just a couple of weeks ago. We never want to be buying brand new 52-week highs in a bear market, but we do want to be taking note of the stocks that are doing so and then waiting for pullbacks like AMP just had. We pulled back slightly above the 21 EMA, rallied right back up to that pivot, and then last week pulled back, undercut the 21 EMA a couple of days, and then closed just slightly under it on Friday. What I'm looking for is a break over Thursday's high as a potential entry point. That's 326.57 for AMP. The next stock that we have is CECO. This is in pollution control, which is actually a group that I've had some success in this year. 41st strongest group out of 197. That's an A- group strength rating. The opposite of AMP, this has very strong fundamentals. Earnings per share up 56, 100, and then over 1,000% year over year. Sales up 29, 34, 36. And after-tax profit margins also accelerating, so this qualifies for the code 33, a fundamental scan that Mark Minervini looks for. With this stock, it too has already made all-time highs. Again, we're not buying those 52-week high breaks, but we want to note that. Pulls back to the 21 EMA and then has a very tight price action the last part of the week, with Friday bouncing at the 21 EMA and then closing in the upper half of the daily range. With this, we're looking for a break over the high from December 7th, which is 1228 as a potential entry point. Next, we have CIEN. This is in telecom fiber optics, 33rd strongest group out of 197. So we got that group strength rating of A-. Right now, this has a C+ accumulation distribution rating, but most recently we've seen earnings come out negative 28%, sales -7%, after tax profit margins, a small improvement, about 10%. But it was the reaction to earnings that mattered, not so much the earnings. And the reaction was we were up nearly 20% on 485% the average daily volume and closed in the upper 25% of the daily range there. Very strong action on Thursday. Since then, on Friday, we pulled back down 2.1% on Friday, but on less volume than on Thursday, which is nice to see. And the low of the day was also just above $50, a nice round number. 50.05 was the low, and the 200-day moving average. So with this one, I want to be attacking it as close to $50 as possible so I can keep my stop loss just slightly below the 200-day moving average, maybe around 49.50. That tighter stop allows a larger position size and potentially larger gains while keeping the risk in check. So a CIEN, want to start a position around 50 as buying support comes in and we see respect for 50. If we gap below 50, then potential entry point is retaking the previous day's low at 50.05 for CIEN. The next stock that we have comes from my potential market leaders group. This is CPRX, a biotech stock. Biotech's 27th strongest group out of 197. This really checks all the boxes. Has a 99 earnings per share rating, A group strength rating, A- accumulation distribution, meaning many of the heavy volume days come on up days versus down days. Overall composite rating 99, individual relative strength rating 9. Fundamentals, very, very strong, both earnings, sales, even after tax profit margins. This is a stock that I've traded a couple times in 2022 with some pretty good success. Most recently, price-wise, we did make a new high. Again, we're not buying those because it reversed, closed right at the low of the day. Kind of shaken out the last couple weeks. And then on Friday, we closed just above a rising 21 EMA, did close below the 8-day EMA. But what I'm looking for here is either a gap down on Monday coming into the $16 range below the 21 EMA and looking for kind of an oops reversal where we buy on strength as we come up and retake the previous low in the flag. That would be 16.18. Otherwise, if the market's strong, I don't want to give the stock any excuses. We're looking for a break over Friday's high, 16.82 is a potential entry point. Next, we have an IPO stock. This is CRDO, another stock that I've traded a couple times in 2022. Most recently, this earnings pivot I traded got a pretty bad fill, so sold immediately into strength there. But now it's setting up again. So this is not in a very strong group. This is one kind of yellow flag against the setup. Internet networks, 177 out of 197, so that's a D- group strength rating. But fundamentally, very strong. The most recent earnings were up 200%, sales up 94%, after-tax profit margins improved by about 5% there. Price-wise, we're above all the key moving averages. All the moving averages are in the right order. We have the 8-day, the 21, the 50, and the 200-day. 200 days now going out flat, and the 50-day is in an uptrend. After this earnings day pivot, it did rally up into this more obvious pivot around 1541. Similar to 52-week highs, we don't want to be trading right at the obvious pivots. We want to wait and kind of buy as close to either key moving averages as possible or round numbers on the downside. So with this, we're looking for a break over 15 on the upside. Otherwise, I wouldn't mind this trading sideways for a couple more weeks, especially with the CPI numbers coming out. We'll get a more clear direction of the market from there. This is CRDO. One thing that I kept noticing when I was scanning relative strength new high stocks is the amount of building construction stocks on there, even though the group is 95th out of 197 right now. So I chose GFF for this video. This is a stock that had an HVC, a high volume close move, previously in the year. So it has stayed in the world of stocks that I watch, but doesn't quite respect the 50-day moving average as I would like. But now we're really starting to see some tight price action above the 200-day rising, 50-day rising, right at the 21 EMA and the 8-day EMA. And we have two declining daily highs. So with this, we're looking for a break over the high from Wednesday, 35.69, call it 35.70 as a potential entry point for GFF. The second biotech stock that we'll cover today is HRMY. This has been on my watch list for a long time as well. Another biotech that actually has earnings up 54 and then 132, sales up 45, 45. Stock that's been in a pretty clean uptrend the last month and a half, 2 months, where the 200-day, the 50-day, the 21, and the 8 are all in the right order. More recently, we have broken into a new high. Again, checking back from that, pulling into that 21 EMA, and looking for a buy point right around $60 or the high from Friday, 60.13 for HRMY. Another group that I didn't want to ignore was semiconductors, and RMBS is one of the strongest semiconductors in the market right now, so I wanted to put this on the list as well. That semiconductor group is starting to work its way up. Right now it's at 126. It used to be at like 170, so we are starting to see some strength out of that group. Fundamentally, this did have a pretty poor earnings, down 93% year over year, but the reaction to earnings was really positive, where we were up 8% one day, up another 2% the next day, and then really rallied all the way up into right around $39. So again, it's not so much the fundamentals that matter, it's the reaction to the earnings that count. The reaction was very positive, and it hasn't given up those gains like a potential pump and dump. So this ran up to about $39, pulled back a little bit, made a new high. Again, we're not buying those. And then another check back to the 21 EMA where buying support came in. So now we are aware that this level gets supported. Ideally, for this setup, the market pulls in Monday, Tuesday. This pulls into the 21 EMA, and we can find a lower risk entry point right around 36.80 or wherever the 21 EMA is around that time, maybe $37. And then keep our stop loss under the low from the 7th, which would be 36.45. Call it 36.39, just a couple cents below for RMBS. Final biotech stock that we'll cover today is SRPT. This is another one that has made a new high, and now we're checking back. You guys are noticing a theme. We're not buying 52-week highs. We're waiting for the pullback to either the 8 or the 21 EMA, ideally the 21. And that's exactly what we got on Friday. Volume on this pullback has been below average, so not noteworthy. It's not like people are liquidating positions. It's probably more just profit taking and the general market pulling back in. So we pulled back in the 21 EMA, bounced right at that low. What I would expect to see is if the market keeps pulling back, this probably undercuts the 21 EMA and then sets up from there. So if the market continues to pull back, we don't want to be putting on too much exposure, but keep this on your watch list. And then on market strength, just breaking over the previous pivot at 120 and the high from Friday, which was 119.65. So 120 is a potential entry on market strength for SRPT. And the final stock that we'll cover today, and one that I haven't seen on Twitter yet, is TT. This is a machinery industrial, 17th strongest group out of 197. Also has an earnings per share rating of 85, accumulation distribution A, composite rating 99, and an individual relative strength rating of 90. Fundamentally, very strong. Technically, we're above a rising 200-day, a rising 50-day, above a rising 21, and just slightly below the 8-day EMA as that flattens out after a nice rally from 140 up to 180. Similar action on market strength, we're looking for a break over Thursday's high, 178.18, or on market weakness. If this pulls into the 21 EMA and then tightens up from there, that would be even a lower risk entry point. And then we could use the stop from the low of the 6th, which is 171.49 as our stop. And that's going to be the breakout watch list for the upcoming week. If you guys enjoyed the video, please do me a huge favor and leave a like and subscribe to my channel. I make this breakout watch list video every weekend along with other trading related videos. A big thanks to Market Smith for sponsoring the video. If you guys enjoyed the trading research platform that we were using to break down each of the setups, you could give it a try yourself by using the link in the description below. And finally, if you want to hear more from me throughout the week, you can follow me on the other social media sites. I'm at Nick Drendel on Twitter and at Nick_Drendel on everything else. Have a great rest of your weekend, and I'll see you guys in the next video.